Hey everyone, how's it going? It's Dan Russo, the Chief Market Strategist at Chaikin Analytics, bringing you some updated thoughts, especially as it relates to what's going on in the market right now on an intermarket basis. This morning in my note to Chaikin Analytics clients, as I do every morning, I highlighted a key chart. And this morning's key chart was actually of the ETF that tracks the US dollar. The ticker symbol is UUP. It's the Invesco DB Dollar Bullish ETF. And the reason that I included it as my key chart today is because we've been talking a lot about the rotation in the marketplace, right? And whether or not it's sustainable and what are some of the signposts that you can look at. So last week I started talking about how you can look at some of the commodity currencies to get a sense for if this rotation is likely to continue. At the same time, we can look at baskets of asset classes, we can look at yields, but I think the dollar is really important to be paying attention here too as well. And the reason is, I think the global growth picture started slowing in 2018. I know a lot of people will remember 2018 as a choppy year for the equity market, with the big decline in December, right around the holidays, before V bottoming up and out and going on a strong run through January. But the remainder of 2019 was fairly choppy until the fourth quarter, until there were signs that phase one of the trade deal between the US and China was being signed, and that led people to think that, hey, maybe the global growth picture is going to start to pick up. So the dollar is interesting in this regard because the dollar bottomed in early 2018, right around the same time of the initial high for the S&P 500 that preceded the volatility explosion that led to a big sell-off in the market in the early days of 2018. The UUP was down around $23 at that time, and then this past March, it was at $29, which is a pretty substantial rally for an ETF that tracks currencies. So the dollar has rallied as the global growth picture was slowing down, right? And when the global growth picture was slowing down, we saw growth areas of the market outperform. We saw the FANMAG stocks outperforming. We saw large cap NASDAQ type stocks outperforming. And over the past 3 to 4 weeks, we've seen a rotation. We've seen a rotation into the more cyclical areas of the market. I've talked about it. We've seen a rotation into value. We've seen a rotation into small caps. And I get the question constantly, how do we know the rotation is real? How do I know the rotation is real? Clients ask that question all the time. So for me, I think it's important to identify key markers that should confirm the rotation, and one of them is the US dollar. As I said, the US dollar bottomed in 2018 as global growth started to slow. It rallied for over 2 years, and now as it looks like global growth might be becoming less bad, the dollar has come under some pressure here in the near term. UUP is now testing a key support level at $26. So one of the data points, not the only data point, but one of the data points that I would be looking at to determine if the rotation was real would just be the dollar against a basket of global currencies. In this case, you can use UUP as a proxy. Now, it's not the best proxy because UUP is not trade weighted. It's heavily weighted towards the euro. But by watching the dollar, UUP in particular, the fund that tracks the dollar against a basket, we can get a sense for if this rotation into the more cyclical areas of the market is likely to persist. And that's why UUP was the key chart of the day in my note to Chaikin Analytics clients today. Hope you found that helpful. I'll be back to you soon with some other updated thoughts and ideas. Have a great day, everyone.